With an increased shift to index-based products that we've been seeing for quite a number of years, resulting in obvious fee pressure for our clients, customers are really looking to differentiate and justify those fees. And with that in mind, what role do you see factors playing, and what are you guys doing in the multi-asset space to support these new solution-oriented products?
Yeah, the pressure on asset managers from index investing is sometimes or oftentimes attributed to cost. But what we consistently hear from clients is that they want to have specific characteristics inside portfolios, right? Which could be a factor or various combination of factors, or even specific themes such as aging society or digital economy or disruptive technologies or smart cities, whatever it might be. And in this way, index-based products are rapidly evolving from being the low-cost option for them to becoming the enabler of goals-based investing and portfolio customization, both for institutional clients as well as retail clients, right? And this is something that is not just for index managers. Active investors are using our content and tools to build portfolios with very specific characteristics that their investors are demanding to deliver, the specific investment outcomes to meet whatever their objectives might be, right? One thing I'd like to comment on, and you mentioned, multi-asset class factor investing, right? Is that the use of factors in equities is already widespread. And it is now increasingly being used in fixed income and multi-asset class for portfolio construction, for risk management, and across the entire investment process. MSCI has pioneered multi-asset class factor investing, right, including both systematic strategies such as trend following and carry, but in a multi-asset class context, right? These are things that have been done in equities and commodities, for example, for a long time, but we are expanding it to multi-asset class. These systematic strategies have been associated with premia, but also we're creating a framework for factor-based asset allocation, right? That is being used to align the total portfolio to the characteristics and macro views that a specific investor might have, right? And also to manage the important factor exposures across various asset classes. So these models are consistently integrated both horizontally. What I mean by that is spanning all asset classes, right? So that all public and private asset classes can be understood side by side, but also vertically. So things like asset allocation, portfolio construction, risk management, and even investor communication can be viewed in a common framework. So this is a consistent framework not only for building and managing portfolios, but also helping these institutions market those portfolios, talk to investors about those portfolios by clearly explaining how the exposures and the risk and performance attributes of those portfolios help investors meet their unique objectives, right? So why is a certain investment product appropriate for an investor? And that's helping, going back to the beginning of this conversation, right? For example, in the wealth management space, to combat fee pressure by increasing the value to the end investor as opposed to lowering their cost. And moving to these type of solutions allows for personalization, right? And that drives client engagement and allow the end investor to focus on their financial needs. So that's just one example on the wealth management space that we're seeing increasing with trends such as direct indexing and things of that nature.